Do have to move on and get our corporate conversations going. Lots of earnings have been coming through. Skipper has been surging in trade this morning after reporting a strong set of second quarter numbers. The company posted a 67% growth in the revenue. Margins also expanded by as much as 90 basis points. Profits jumped by a whopping 570%. This was led by, of course, stronger revenue. And also there was an element of other income to it. To discuss the quarter gone by and the outlook for the company going ahead, we have Sharan Bansal, Director at Skipper, to take some questions. Sharan, thank you very much. Good morning and season's greetings to you. So I guess the numbers are looking good. Your investors and stakeholders seem to be quite happy. But tell us, I mean, is this because of a base impact, or is this because of sort of one-off contracts, or are you going to be expecting this level of top-line improvement and momentum to continue in the second half too?
Hi, good morning and season's greetings to you as well. Of course, this is definitely not a one-off surge that we are seeing. We have previously guided for at least a 25% CAGR growth over the next 3 years. We are quite confident that we will be delivering well over that number, and hopefully we will be able to revise that guidance upwards in the coming quarters. We are at an all-time high of an order book position. Quarter two, we ended with an order book of about 6,000 crores, which is the highest in the company, which gives us more than a 3x revenue visibility over last year's revenue. Look, this momentum is here to stay. We see very, very good demand potential in our core business, which is power transmission and distribution, not just in India, but all over the world. Skipper does export to about 65 countries worldwide, and thanks to the push in renewables investments, we are seeing that globally power transmission will continue to see investments. In fact, we expect those investments to pick up further momentum as the time comes.
Okay, that is on where things will be headed in the second half. It's good to hear that, this is not a one-off and this kind of performance can continue. I want to ask you specifically on the orders, because just in Q4, I think you've seen over 1,500 crores in terms of the order inflow. Can you just break this up and tell us where this is really coming from? And since you mentioned exports as well, what part does exports contribute now?
Yeah, sure. We have seen in the last 1 year or so, we have seen very strong ordering happening in the domestic front. As you know, domestic ordering in the T&D space was quite stagnant over the last 4 to 5 years. However, since the beginning of last year, towards the end of last financial year, Government of India has come out with a very ambitious plan to connect 500 gigawatts of renewable power into the grid, and is expected to have a transmission and distribution investment of approximately 2.5 lakh crores up till 2030. So we have seen those orders starting to come in the domestic market. And that's why in the last couple of quarters, the order inflow has been stronger on the domestic side. Having said that, we do see robust demand all over the globe, thanks to renewable investments. And in the coming quarters, we're expecting some significant export orders to flow in as well.
Okay. Sharan, I just want to get clarity on a couple of numbers, because I think along with the results, the outlook said that you're looking at 25% CAGR growth over the next 3 years. Is that in terms of top line, or is that order book growth that you're expecting?
Both. Definitely, our order book has seen almost a 3x growth over last year to now. So obviously that is much, much higher than 25%. The transition into revenue has already started happening. As you've seen in the first half of the year, there's been a growth of about 51% in top line already. So the 25% CAGR growth over the next 3 years is already very conservative. We are quite confident of beating that number and hopefully revising that guidance upwards in the quarters to come.
I mean, great. You're extremely confident on the top line. It'll probably be better than even the guided 25%. Let's talk about the revenue mix, which is, of course, skewed in favor of engineering right now. But you did mention that, the other segments, renewables, etc., a lot of that is also picking up. So what is the mix going to look like, say, by, the next 1 year? And give us a little bit of color on the profitability of these individual segments in terms of margins, because you've showcased margin expansion at the overall company level this quarter. So what's happening overall with margins, and which segments are contributing to this margin impetus?
Sure. We have three business segments in the company. Engineering, which actually caters to the renewable sector, because Skipper is one of the largest manufacturers for power transmission and distribution structures all across the world. So that is our major segment, which contributes about 70 odd percent to our top line. 20 odd percent comes from our polymer segment, where we produce PVC pipes and fittings for the plumbing sector. And 10 odd percent comes from the infra segment. We are likely to see this mix continue or shift slightly in favor of the infra segment is likely to grow on back of the orders that we have just received. But engineering will continue to be the dominating segment in the company, contributing at least 60% of the revenues going forward. In terms of margins, our margins they continue to be in line of our expectations. Engineering segment, we are, we have been given a guidance of approximately 12% at the operating level, and at the infra segment, we do expect that the margins will contribute about 10 odd percent. So overall, yes, the company is well on target to continues to improve the top line as well as the bottom line from here on.
So Sharan, for engineering, because it is your largest segment, 12 to 13% is the normal level, right? Right now you are trending below that. So when are you did say you would get back to 12, but when do you see that happening? What is the kind of timeline you expect?
So across the company, the polymer segment, right now we are at about 4 to 5%. There we are still a growing brand, and we have launched a national ad campaign. This is also giving us very good revenue growth, both in terms of volumes as well as value. And we do expect that margin expansion, which is there about 4 to 5%, will continue to see and move towards double digit very soon as well. So that's why we are quite confident that at the company level, we will continue to be at 10% plus, and at the specific segment level, the margins which I spoke about earlier.
Okay, Sharan got that. Well, extremely strong commentary and strong body language. I guess your investors, as I said, are going to like every bit of that. Hope for a longer chat. Would love to talk more about cash flows and capex plans going forward, but that's for another time. Thank you very much for joining in today. That is Skipper. Pavitra, this stock was about 69 rupees same time last year. It's at
240% in terms of a gain there. But the management also sounding very, very positive, like Surbhi was pointing out, saying that they are going to definitely grow at 25% over the next 3 years, but probably more than that as well. With that, it is time for a short break. But on the other side, we're going to